The semiconductor industry is at the heart of nearly every technological breakthrough we see today, from artificial intelligence and cloud computing to electric vehicles and next generation smartphones. I strongly believe the semiconductor industry is still in an early phase of massive growth, and positioning yourself now could lead to significant profits in the coming years. Today, I'm going to reveal the top 5 semiconductor ETFs you need to know about, ranked from number 5 to number 1. Whether you are building a technology core or targeting specific semiconductor sub-themes like AI or options income, this ranking is designed to give you the clearest picture of the leading ETFs in this space. Let's start with number 5. Number 5. SPDR S&P Semiconductor ETF with ticker symbol XSD. XSD provides broad exposure to the semiconductor sector by tracking companies of various sizes within the S&P Semiconductor Index. Unlike some large cap weighted semiconductor ETFs, XSD is equal weighted, which gives relatively more influence to smaller and mid-sized semiconductor firms rather than focusing only on the largest names. This can provide a different performance profile, especially in cyclical up moves where smaller companies outperform. Over the past year, XSD has delivered strong performance, with significant returns driven by both large and mid-cap semiconductor names. The total return last year was about 50%. It typically has a competitive expense ratio around 0.35%, making it cost-efficient for long-term investors. XSD's diversified semiconductor exposure makes it a solid option for those who believe in broad sector growth and want a fund that participates across multiple chip industry segments. At number 4, we have a tie between two very different but equally compelling semiconductor ETFs. First in this tie is CHPY, the Global X Semiconductor Portfolio Option Income ETF. CHPY is an actively managed ETF that seeks to generate current income and capital appreciation by investing in a focused portfolio of semiconductor companies and using option strategies to generate income. Unlike traditional sector ETFs that passively track an index, CHPY's approach is more tactical, with income distribution as a key goal. It aims to distribute income on a weekly basis, which is appealing to income-focused investors, but also involves higher risk due to the use of options. CHPY pays weekly income with an annualized yield of around 30%. This new ETF has delivered an 83% return in just 10 months, assuming all the dividends are reinvested. I have made a dedicated video for this ETF. You can check it out. The link is in the description below. The fund has an expense ratio of 1.03%, which is justified for a distribution rate that reflects its income-oriented strategy. CHPY may be especially interesting for those seeking semiconductor exposure plus structured income, but investors should understand the potential for option-related risks. Also, tying at number 4 is SOXY, the Yield Max Target 12 Semiconductor Option Income ETF. SOXY is another actively managed ETF that focuses on generating targeted income of up to 12% annually while investing in semiconductor companies. It uses options strategy similar to covered calls and spreads on its underlying holdings to generate this income. Unlike traditional ETFs, SOXY places a strong emphasis on distributions, which it seeks to pay monthly and therefore may appeal to investors who want both semiconductor exposure and enhanced income. Its net assets are relatively small, reflecting that it is a newer income-oriented semiconductor ETF, and its expense ratio of 1.06% is notably higher due to the complexity of its strategy. Personally, I would choose CHPY over SOXY. The weekly payouts are a big advantage, and I believe it has the potential to deliver strong returns for at least the next few years. In third place is the iShares Semiconductor ETF with ticker symbol SOXX. SOXX is one of the largest and most established semiconductor ETFs in the market, with over $20 billion in assets under management and long-standing history tracking the PHLX Semiconductors Sector Index. What makes SOXX stand out is its broad and diversified exposure to the major semiconductor manufacturers and designers, including many of the largest industry players. Its expense ratio is competitive for a sector ETF, and its liquidity is among the best you will find in this category. Over performance periods, such as 1 year or longer, SOXX has generally outperformed many of its peers due to its exposure to both mega-cap semiconductor leaders and a diversified set of companies across the semiconductor value chain. 1-year return for SOXX at the time of recording the video was 55%. With the expense ratio of 0.34%, it has diversification and broad market representation, which make it a core choice for many technology investors. At number 2 is the VanEck Semiconductor ETF with ticker symbol SMH. SMH is another heavyweight in the semiconductor ETF space. It tracks the MVIS US-listed Semiconductor 25 index, which includes the largest and most liquid semiconductor companies in the world. Compared with other semiconductor ETFs, SMH has slightly broader global exposure while still maintaining strong liquidity. Its expense ratio is competitive at 0.35%, and its asset under management sits at $46 billion, which reflects investor confidence and scale. The key difference between SMH and SOXX is in the index methodology and weighting. SMH can have higher concentrations in mega cap names depending on index rules, which may benefit performance when the largest semiconductor companies are leading gains. Overall, SMH has generally delivered very compelling performance over time and often sits alongside SOXX in terms of total return, liquidity, and relevance. 1-year return is around 58% while recording this video. Now it's the time to reveal the number 1 ETF. And the number 1 ranked semiconductor ETF on our list is the First Trust Nasdaq Semiconductor ETF with ticker symbol FTXL. FTXL is a uniquely structured ETF that combines technology factor exposure with more active selection, tracking a Nasdaq-designed semiconductor index that considers factors such as gross income, return on assets, momentum, and cash flow to select and weight semiconductor companies. What sets FTXL apart is its rules-based approach that focuses on quality factors within the semiconductor sector rather than simple market capitalization. This allows the fund to emphasize companies with stronger fundamentals like solid cash flow or income generation potential. FTXL's expense ratio of 0.6% is slightly higher than some pure indexing funds, and it has a meaningful asset base in the hundreds of millions, giving it sufficient scale and liquidity. Its portfolio includes many of the top semiconductor names like Micron, Intel, Broadcom, and Qualcomm, balancing exposure across the sector. 1-year return is around 69%. For investors seeking semiconductor exposure that blends factor-based selection with diversified industry coverage, FTXL stands out as a compelling number 1 choice. To conclude, semiconductors are at the foundational core of modern technology, and I strongly believe them to remain a key driver of growth as computing power continues to evolve in coming years. When choosing a semiconductor ETF, investors should consider not just past performance, but also strategy, portfolio composition, liquidity, expense ratios, and thematic focus. While some ETFs excel in broad market exposure, others focus on income or thematic trends like AI and quantum company. If you think I missed a semiconductor ETF that deserves to be on this list, or if you want future rankings focused on some other themes, please drop your suggestions in the comments. And also please understand this is not a financial advice. This is only for educational purpose. Always do your own research before investing. I would love to hear what you want to see next, and we'll see you in the next video.